today I will show you exactly how you can be using technical analysis and order flow to find the best trading setups in the market from a swing trading perspective. So we will be taking a pair, analyzing it from a technical and order flow perspective, and by the end of the video I will show you exactly where is the best area to be looking for a potential trading opportunity. Now, if you're new to the channel, I'm a top author on the TRADINGVIEW platform and I share free education and analysis on all my platforms daily. So I suggest you subscribe to the channel so you don't miss out on all the free education that I put out, and I will see you in the video. Okay, so the pair that I want to speak about today is exactly USDCAD. Now, if you're asking yourself, why do I want to speak specifically about this pair? Because both from a trading opportunity standpoint and an educational standpoint, it is an extremely interesting pair to follow. In fact, it is very near to providing a very good trading opportunity, and it will be very interesting to analyze it. So I will be performing a full analysis on it, obviously also checking the order flow. And by the end of the video, you will see exactly what kind of trading opportunity we will be looking on the pair with students. So let's start the analysis. And as usual, I will try to keep it as educational as possible so that you will understand exactly what you have to incorporate in your own trading strategy. So let's start from the monthly time frame. Now on the monthly, clearly what we can see that we had on USDCAD, we clearly had an extremely strong impulse to the upside. Now after you see an impulse in the market, if you want informations on the retracement that is followed, that always follows an impulse, what are you supposed to be doing? You're supposed to take your Fibonacci from the low to the high of the impulse. Okay, that is how you understand what kind of informations you can take on the retracement, taking your Fibonacci on the impulse. And by doing it, what we can see that the market retraced exactly to the 0.786 Fibonacci retracement taken on the impulse. Now, if you're asking yourself, why did the market retrace exactly to the 0.786 and why it was actually exactly what we expected? The reason for which the market retraced exactly at the 0.786 is because it was the Fibonacci level that was aligning the best with structure. What does it mean? It means that it was creating a confluence of support with the previous resistance now turned support. And in fact, that is exactly the level that the market went to test because it was the confluence of support. So the market went to grab the liquidity at the previous resistance turned support. In fact, before starting all this move to the upside, where is the last time that the market went to the downside? Exactly here. So previous resistance turned support in confluence with the 0.786 is definitely a level that you want to see the market retrace to, and that is what the market will do most of the times. Okay, retrace to the Fibonacci level that is aligning the best with structure. Going down on the weekly time frame, what do we have? Now on the weekly time frame, we can clearly see a confirmation of the structure that we have already identified from a monthly perspective. In fact, what we can see is that all this zone here is an extremely strong support area from a weekly perspective, and it was acting as very strong resistance here, again resistance here, again resistance here, again resistance at this area. The market broke it to the upside, and now that the market is retesting the level from the upside, all this previous resistance is turned support in this area, and it has already rejected the market here, and currently the market is testing the zone again with a bullish pattern. In fact, not only the market is testing an extremely strong support area both from a monthly and a weekly perspective, but it is testing it also creating this M formation. And after an M formation, what do you want to see? You want to see the market reject the structure to the upside. So basically the market to complete the pattern at the neckline of the M formation, which is the previous support now turned resistance. So basically what we would like to see from a weekly perspective is this M formation to complete with a move to the upside that tests the previous support turn resistance, which is the completion zone of the M formation, and rejects the structure support that we have on the monthly and also here on the weekly. Let's go down on the daily time frame and see what we have from a daily perspective. And then we will check what we have from an order flow perspective. Just a quick reminder, make sure you comment below and you let me know which pair or topic you would like me to cover or analyze in the next video. Now on the daily time frame, what we can see. First of all, we can clearly see that not only this is the neckline, this red box here is the neckline that we have on the weekly, so our target to the upside, but also on the daily it is a very strong level of structure. In fact, here on the daily it is the previous support here, against support here, against support here, against support here, and all the support is now turned resistance here. And we definitely expect the market also from a daily perspective to make a move to the upside to test this level. So we want to see also on the daily the market to go and grab the liquidity that is at this level, because it is also the completion zone of the information that we have on the weekly. Now, if we are to identify the structure here on the daily, we can also see another level that we can't ignore. In fact, before we identify our upside target here, there is one level in the middle between this strong support that we have on the monthly and weekly and the overall upside target that we have, which is this resistance here. In fact, what we basically have here is a market that made a move to the downside, found support at this level with this green candle, and this previous support is now turned resistance at this level. And until we will see a daily break above this level, we can't be looking for the continuation to the upside, because we will be longing at daily resistance, which is never a good idea. Now let's go and give a quick check at what we have from a COT perspective before I show you how we will be approaching this situation with students. Now, from a COT perspective, if we check the data for the CAD, and by the way, if you don't know what the COT data is the commitment of traders. So basically what the biggest banks and institutions are currently doing in the market and how they are positioned. Now, what we can see from a CAD perspective, and by the way, if you check the data for the CAD, what you're actually checking is CAD USD, because all currencies on the spot are traded against the USD. So if you check the data for the CAD, you're actually checking CAD USD. So if you want information on USD CAD, we just check the data for CAD USD and then we reverse everything. And by checking the data on CAD USD, what we can see is that net positions greatly decreased. We went from a situation where we had way more longs than shorts from an institutional perspective, with 74k longs and 36k shorts, all the way down to having a negative net positioning. So from an institutional perspective, having more shorts than longs, with 58k shorts and 23k longs, and then net positions clearly increase now all the way up to minus 16k, with 50k shorts and 34k longs. So clearly we have seen first institutions selling the CAD. And why they were selling? Because CAD correlates very well with oil, and during the crisis oil was moving to the downside. Therefore, clearly institutions were as well selling the CAD, and now that the oil is rallying, the CAD is following as well. And in fact, institutions have been selling USD CAD because they have been buying CAD USD, as you can see here, net positions have been increasing. And if institutions and hedge funds are selling USD CAD definitely will make the move to the upside because they have most of the money in the market. So overall, can we expect a move to the upside? Yes, because in the long term, clearly the shift has been to the bearish side of CAD USD, therefore to the bullish side of USD CAD. So we can expect USD CAD to actually make this move to the upside. However, trading as usual is reactive, it is not predictive. And as we have seen on the daily, we are still below the daily resistance, and on the 4 hours, we still have bearish 4-hour structure. Everything is still bearish. The market is creating lower lows and lower highs. There's still nothing that we can do on the pair, okay? Everything is still too premature, but this doesn't mean that the market cannot provide a trading opportunity. That is why all inside of this area, okay, no matter how much to the downside the market will go, if we will see a spike to the downside, it will be even better, because then for the move to the upside, we will have more liquidity and a better risk to reward. So with students, we will be monitoring price action all inside of this area, waiting on the 4-hour time frame for the market to shift from a bearish to a bullish market. And as soon as the market will shift from a bearish to a bullish market, at that point we will add USDCAD on watch list, and as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a very good risk to reward and very good probabilities for the move to the upside, completion of the weekly, and formation rejection of the monthly support, the weekly support, and the daily support. However, be very careful because at the moment here we have daily resistance, and from here we can expect a little bit of continuation to the downside. So we definitely have to be careful on the 4 hours to wait for a proper shift back to a bullish market. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis and education for all of you. Also, you find linked in the description the complete mentorship program that I have. So the way in which the program is structured is that first you learn all the rules of my rule-based strategies, and then you trade them live with me each and every day. I give you a new daily market breakdown showing you exactly how to apply the strategies with entry, stop, and take profit, as well as answering every single question that you have every day. So I really suggest that you go and check it out, and I will see you in the next video.